Welcome to Deal Talk. I'm Michael Marzec, and on today's show, I'm sitting down with Scot Crow. Scott is a governing board member at Dickinson Wright and head of the law firm's private equity practice. We're going to take a look at the latest trends in the red-hot cannabis industry. Scott was one of the earliest lawyers to focus on helping clients get up and running in legal marijuana-related businesses, and now has nearly 10 years of experience in the industry. Scott, welcome to Deal Talk.
Thank you, Michael. Thanks for having me.
So before we jump into the issues, give us a little more background on your work in the space, how you got started in the sector, and what kind of work you're doing today.
So my background, particularly in the M&A space, has been the majority of my transactions are in the healthcare sector, medical practices, podiatry, veterinarian, dental, aggregation type models. And when I first joined Dickinson Wright, a little bit over 10 years ago, there was some interest in the cannabis sector. We knew it was headed from the west to the east based on the legislative efforts that were going on in the east. It was just a matter of time before there was some sort of legal regime in several of the states, which we now have today. So we attended a couple conferences, and it was very clear that cannabis was, while they talk about it being a weed, and the association, I think originally it was hippies and growers. It's a very sophisticated area of law, fraught with tons of areas to misstep, highly regulated, and it fit nicely into a healthcare type practice. It was something that I always had a belief in as well, that should be available to Americans. Whether you use it or not, doesn't matter. It's really about having the choice to use and have access to it. So for those reasons, it felt like a good fit for a big box firm. The conferences we attended, there just were small lawyers that typically were criminal lawyers that have become administrative lawyers, and now we're trying to do the business and legal work as well. And anyone who ever tells me they're a cannabis lawyer, I don't know what that really means, because it's an entire industry sector, and it requires environmental, IP, litigation, employee benefits, labor and employment, anything you would see in a sophisticated business. Those same types of principles and needs are going to be applied. And I'm not aware of any single attorney that has all those skill sets covered in a single practice area.
Great. So let's talk about the industry. So revenues in this sector have doubled over the past 3 years. They're on track to reach $25 billion by 2025. What's the overall landscape? What types of businesses are we talking about? You mentioned it's a very sophisticated sector. Is it a handful of big players, lots of smaller players? What's it like?
Well, it's a handful of big players, lots of little players, and then you have the really big player, which is the illicit market. So if you canvass the cannabis industry today, even with the growth of legal multi-state operators, growth throughout the United States, the largest competitor in each and every state still remains and continues to be the illicit market. That's the challenge, is to get patients to convert from buying from their illegal growers, their illegal retailers that they've done historically, to now convert to coming to a retail location to purchase their cannabis.
So, one issue that faces the industry is the question of financing. How are companies involved in production and distribution financing their deals?
Financing's tight. COVID put a white light, obviously, on the industry, and the sector grew really quickly. Revenues were at an all-time high. But at the end of the day, it's just like any other business. It's competitive. It's difficult. You typically see price compression anytime there's a conversion, particularly if you have what are called capitated and uncapitated states. Uncapitated just means there's unlimited licenses that are available at the state level, but there may not be unlimited license at the local level. So it's a little bit of a misnomer. It takes a little bit more of a look and see into the location of where you may want to open up your operations to see if there actually are licenses available within that locality. But as you've seen in California, you can see in Michigan, price compression has occurred. It's gone from, upwards of almost $5,000 a pound to, I think Michigan hovers just above and sometimes below $1,000 a pound in the wholesale market. So what you're seeing from a financing perspective is a lot of companies that are still in need of a lot of capital. We constantly tell our clients as soon as they close their round of financing to start the next round because they're going to need it to weather the storm until the market stabilizes itself. The benefit the bigger growers, the MSOs, have is they've got breadth. So their risk is allocated across the country, and they can help support suffering markets where if your only operations are in the state of Michigan and you're a single operator, you constantly need to be thinking about capital and how to raise it. And unfortunately, today, the market's very tight when it comes to money. Many of the debt funds are pulling back money to save for better opportunities or for the cash needs of their larger borrowers that they know are going to need additional cash and need to be able to there to support them. Fundraising is very tight, very difficult. It doesn't help that the public sector and the cannabis markets are probably, in some cases, a 10th to 1/20th of what that value was 12 to 18 months ago.
So you've mentioned a couple times now MSOs. That's a hot topic. That's a multi-state operator model. Can you explain what that is and why it's helping the industry, thrive despite sort of the conflicting regulations across state lines?
Well, the multi-state operators are really just larger conglomerates of groups of cannabis companies: Cresco, Green Thumb Industries, Curaleaf, Columbia Care, which is now in the process of merging with Cresco, are some of the bigger players in the space. It's funny that the MSO model popped up very early in the cannabis sector where, typical basic business principles usually would suggest that you grow a small geographic area, fine-tune your operations, and then try and grow out of that through the rest of the United States. The cannabis sector, you saw the GTIs and the Crescos opening up in all of these states because of competitive application processes that they won licenses, but then they had capital needs and requirements to build out those operations and actually conduct business, which puts a lot of stress on those companies. The benefit is they have risk throughout the country, so they're not in a single state. They're not in a single location. They have multiple locations, and typically the MSOs are what you call vertically integrated. So what that also helps them to do is protect against price compression, because what you see in the wholesale market where prices may be coming down, it's not reflected necessarily in the retail market. So prices remain high from a consumer standpoint, but what you see is a lot of slush in between the actual process of growing to when it hits the retail store. If you're vertically integrated, you can protect against that price compression. So that's how the majority of those models are built out.
So given all the kind of conflicting laws between federal and state regarding, distribution, cultivation, investors don't necessarily like that kind of certainty. You've talked about some people pulling back. How does that impact the structure of deals and what you're seeing in the market now?
Well, it's definitely keeping your typical private equity players at bay. If it's a true private equity, a typical fund, New York, Boston style fund, they have prohibitions against investing even in these styles of businesses. Some can invest in horizontal equipment players, lighting, fixtures, things like that. But direct investments into what are called plant touching businesses are relatively prohibited. So until federal law changes, access to those markets is going to be continually barred unless something were to change with those funds. You are seeing specialized funds pop up in the sector, but those funds are 25, 50, 100 million. You're not seeing a 500 or a $1 billion fund that is in the sector that's buying up plant touching assets. Federal legalization has a chilling effect for a lot of people. It continues to be an illegal substance. It's not being policed or enforced. And for the most part, I think the government's position has been and will continue to be that if you're compliant with state laws, you probably have little risk of any sort of enforcement activity. Obviously, that could change with any sort of change in the regulatory bodies at Congress. I think there was a lot of hope when Biden became president that we would see real movement at the federal level, but that just hasn't happened yet. The House continues to pass its bills. The Senate continues to not pass their portion of the bill. Although you did see recently, for the first time,
on
one of
the
the bills
federal
came in
front,
through the Senate.
With it
which was a first.
continuing to be illegal, I know that has created some issues with banks being notoriously low to deal with retail operators, and everything has been on a cash basis. What's going on to move away from this cash business model?
There are banks that are starting to pop up. So there are solutions that are coming on a state-by-state basis, but those are state-chartered banks or credit unions that are playing in the space. There's several in Ohio, for example, that are now starting to bank the sector. When I say bank, they're providing depository solutions, but very little banks are actually lending into the space. They're just still not comfortable with the federal illegality issue and the fact that the assets could technically be caught up in a RICO action and conspiracy action, and the assets would then be at risk. So you just don't see that movement quite yet, but it is improving. Banks are getting more comfortable with cannabis operations, and it really comes down to a know your customer type concept, which is expensive in the cannabis sector. So banks looking to jump into the space have to beef up their own intercompany, or they need to outsource those types of operations to make sure that they're clear on where the dollars are coming from those clients, and that is actually from legal operations, state legal operations, as opposed to the illicit market.
So let's talk a little bit about valuations. It's an industry where it's tough to project your operating environment looking forward. So how are companies and brands being valued in this sector?
Well, the valuation methodology is becoming more normalized. So it's a EBITDA-based valuation is what banks and investors are starting to look at. Unfortunately, those multiples have come down to about a third of what they were, again, 18 months ago. So while we're still seeing a lot of M&A activity, some of it is M&A activity by necessity, not to maximize value, but for those that are looking for capital, don't have the ability to run their operations or find themselves in a situation where they need to partner to protect against things like price compression if they're solely a cultivation operation. So those that aren't vertically integrated, we're seeing them start to move to join those vertically integrated operations and grow conglomerates on a state-by-state basis. So M&A is occurring. It's not the fun type of M&A where everyone's maximizing value. It's more merger by need as opposed to merger by desire.
So when you talk about the valuations being down, I had seen some numbers of maybe 5 to 7 times revenue on the low end and 10 times maybe for bigger companies. That's where it's at right now, or are those actually some old numbers?
I would say those are old numbers, and the market's gone further down. If you're just looking at the public companies, I think they might be trading at lows as a multiple of 3 to 4 today. But the good news is if you're an investor and you're jumping into the space now and things change, I don't think the stocks can get much lower than where they're at now. So if I were to make an investment, I definitely would be playing in the public markets today.
So, I mean, what do you see needs to happen for the outlook to improve and for those valuations to get back up?
I think there needs to be some movement at the federal level. I think that lack of any sort of government involvement, because you as a cannabis operator, you have to comply with federal laws. So all the laws that exist that apply to all other businesses, you have to comply with them. You have the federal chokehold. Chokehold, I call, is probably not a good word, but the lack of desire for any sort of true legalization effort pushes everyone away from the sector. There's not an unlimited number of lawyers or accountants or insurance providers. The entire industry suffers from really a lack of service from those people that can actually help the industry, help it grow, help them gain access to money, and they're going to continue to sit on the sideline. So in my opinion, the sector is going to continue to suffer until you see some sort of change, or there's something unpredictable in the market, such as COVID, which put, again, a white light and kerosene onto the cannabis sector. And for a lot of businesses, not only did it help them get over the hump, it saved them from closing up or becoming insolvent and bankrupt.
So aside from those issues, I mean, do you see continued growth for the sector? I mean, aside from the valuation issue?
Absolutely. I think you see continued growth, continued desire to move into new sectors and new states. All of our clients are thinking and looking about growth cautiously, but they are looking about growth. And you're going to, I think, continue to see more and more states pop online. A good example is Ohio's legislative efforts. I would expect that by this time next year, we have some sort of legal regime in place for adult use cannabis, which in Ohio is going to be a boon for all of those license holders that are currently operating, because their patient population is going to multiply by 10 by giving access to everyone in the state of Ohio. What that means is a short-term bump. But as the market gets built out and it becomes more competitive, it becomes just like any other industry. The better operators are going to win, and the operators that can't compete with them, either because of size, scale, or talent, will either be bought up or will lose their operations.
So you mentioned earlier that PE firms, a lot of them won't get into anyone who's touching the actual product, and it's more maybe equipment processing. Are there specific types of businesses in this sector that are hotter than others right now from either an investment standpoint or an acquisition standpoint?
The lending area is a very hot area from a topic standpoint. And it's also going to be an area of high activity, I think, where you're going to see a lot of new law being made, because there are many borrowers that have to be out of covenant with their lenders, just based on even our patient. If we polled not our patient, but our clients, just based on that small group, I think you're going to see foreclosure actions. But from a sector, we're seeing a lot of licensing companies pop up. So there was this desire to build brick and mortar operations for a very long time. That continues. It's not irregular that we have clients that continue to seek and acquire licenses and build out retail stores or cultivation stores. But there's a bigger push of a lot of clients that are trying to build a house of brands, where they actually partner with those brick and mortar or production companies to bring their products to market. So it's more like a Nike type model, where there's not much on the production or asset ownership. It's more of a branding and IP play, very similar to Cookie's model.
So again, earlier you mentioned about the public company valuations being down and being a good place to invest or get involved in the market. From anyone interested in getting in on the private side of things, what does that look like right now? What kind of opportunities are available?
There are opportunities. There always have been. The issue in the cannabis industry, I suppose you can compare it to the .com kind of era, is there's a lot of real investments and there's a lot of fake investors. Fake investment opportunities are what I would call them, or poor investment opportunities. You really need to pay attention to the individuals that are running and the founders of the company, what their success rate was with past ventures. If there's a history of failure, by getting a cannabis license doesn't mean that's going to change necessarily that storyline. So you have to be careful. There's a lot of trafficking in licenses where groups are purporting to own a license and they're attempting to sell it, and they don't actually own the license. Is what you come to find out. They may have some path to a license. So it's just an area that's fraught with a lot of misinformation. So it's important that you work with your accountants and your lawyers and do your diligence behind the investment, and just don't get enamored by it's cannabis and I want to be a part of it. That's great, but you need to do it safely and cautiously.
Well, Scott, that's great advice for our audience, who I know is very interested in this sector. So I want to thank you for joining me today on DealTalk and sharing some of these great insights into M&A activity and what's going on in the cannabis space.
Hey, Michael, thanks for having me, and appreciate the opportunity to jump on here with you.
All right, hang on one second while I hit